Basically, what we do is that the books of original entry and the ledgers are merged into one document. Then the trial balance comes forth. Then the financial position follows, and other particular records follow. So let's go to Excel. I would share my screen, and we will do a trading company from basic records down to the final accounts. So please, if you can see my screen, confirm you can see my screen by raising up your hand. Please, if you can see my screen, confirm you can see my screen by raising up your hand, so that I will not carry everybody along while please confirm you can see my screen by raising up your hand. Please, at any point in time you feel lost in the lecture, at any point in time you feel lost in the lecture, please go to and put your questions so that you will not forget. And if it's an emergency, we will attend to them. If it is not an emergency, we will attend to all the questions together when we are done teaching. So those whose hands are up, you can bring it down. Thank you very much. Once again, thank you for joining us in this session. We are pleased to have each and every one of you. Please, those whose hands are up, you can bring it down now. Thank you so much. So now, when you open Excel for the first time, it will look like this, exactly the way it is on my screen. So the question is, as a trading company, let's assume my company is a trading company, so we'll be working with OFS. Let's say OFS, and okay, let's use Wilson and Sons. So I have Wilson and Sons. Now, Wilson and Sons is a trading company, right? So let's assume Wilson and Sons is a trading company that deal with wholesale and retail of canned drinks. Let's believe they deal with wholesale and retail of canned drinks. So they have their warehouse where they do the wholesale, and they also have a retail outlet where they sell 1, 2, 2, 3, 3, and so on and so forth. But they sell only canned drinks. They don't sell anything else. So they sell ranging from Pepsi to malt to Fanta to Coke and so on and so forth. Now, as an accountant of Wilson and Sons, you are supposed to identify the 5 legs of the transactions, Abi. Now, remember in yesterday's lecture we said accounting has 5 legs. We have the assets, we have the liabilities, we have the income, we have the expenses, and we have the capital. Now, you are supposed to find out these legs and what make up these legs. You're supposed to find out these legs and what make up these legs. So for assets, for example, we should have the non-current assets and the current assets. For those of you who agree with me, we should have the current assets and the non-current assets. And majorly for a trading company, the non-current assets, if we are talking about small businesses or SMEs, for example, most of them don't have goodwill, right? So the major non-current assets are PPE. So we are looking at land, building, office equipment, furniture and fittings, plants and equipment, and so on and so forth. Probably we'll stop here for now. They can also have motor vehicle. Some persons will say, depending on the type of business though, they would like to differentiate computer equipment from office equipment, but it depends on the class of assets we are discussing. Some persons believe computer equipment should be here, others don't. But we will talk about this. We'll talk about this on Friday next week when we'll be treating live questions on accounting. So if you have a complaint or you have whatever you want, you can bring it on Friday. We'll be treating everybody's life problems on Friday. Now, for the current assets, we are going to have receivables. What I call receivables are what we know as debtors. So we're going to have receivables. Now we will have our inventory. Inventory is stock. IFRS changed it to inventory. Receivables is debtors, like I said before. Cash and cash equivalent, I'm going to pieces them so that we will understand, because cash is separate. Cash at hand, or cash balance, or yeah, cash at hand, cash balance is still cash. Then we have cash at bank or bank balance is still the same thing. Then I think for now that is that, unless you want to start adding prepayment, because let's add prepayment, because most trading companies, the only thing they prepay in their life is rent, unless maybe they have electricity. For those who are using prepaid meter here, they will now say okay, they are doing prepaid electricity. For SMEs, the only prepaid they will have is rent. So for those who own their own building, those who bought the shop, they bought the warehouse, they bought whatever they are using, prepayment is never a problem. But let's assume we have prepayment. Now we'll come down to the liabilities. Let me take liabilities to this side. I'll bring liabilities to this side. And normally as liabilities will have non-current liabilities and current liabilities. Then under your non-current liabilities, we are looking at things like loan, and under your current liability, we are looking at payables. We are looking at payables. We are looking at accruals. Then the capital parts. Let me put capital here, if you don't mind. Under the capital, we are looking at retained earnings. And we're looking at retained earnings. We're looking at owner's equity. Then we are looking at owner's draw. Owner's draw is what we know as drawing. Owner's equity is what we know as capital or investment or whatever you call it. Retained earnings is profit accumulated over time. So now this owner's draw, because it's a trading company, is further splitted into two: cash drawings and inventory drawings. Cash drawings and inventory drawings. The owner, now cash drawings, inventory drawings is different from complementary. Let me write complementary here. Cash drawings and owner's drawing is different from complementary. Okay, before we continue, I would like to know if anyone knows what I mean by complementary. For you to know what is complementary, I bet you should either be working in a hotel or a bar or a club. Let's see. Does anybody know what is complementary? Like what I meant by this word complementary with respect to inventory. If you have an idea, just do well to raise up your hand so that we'll... Anybody? Okay, fine. For the complementary part, we are talking about when the owner takes an inventory and gives it out to a customer or a prospect, right? let's assume this is a hotel now, or a bar or a club, for example. Now the owner of the club, it happens majorly in hotels, bars, clubs, where this customer is a customer that we know he always comes, this, that, and the other one. Now the customer, maybe the customer ordered for a an expensive wine, maybe a wine costing about $500,000 or so, and the owner of the hotel will bring a wine costing a wine, the price tag is around 100k, and send it to the person as complimentary. Now complimentary is not part of owner's draw. I've seen a lot of auditors, a lot of accountants make that mistake, and that's why I want to point it out here. Complimentary is not part of owner's draw. Complimentary is a form of sales promotion. Complimentary is a part of sales promotion. The owner is trying to there's what the Igbos normally say: when you praise big man for the one wey you don do, you go do pass that one wey you don do before. So complimentary is part of saying thank you for your continued patronage, keep up the good work, we see you. That's complimentary. So it's not part of owner's draw. So if you are here and you're recording complimentary as part of owner's draw, just learn it, because we learn every day. Complimentary is not part of owner's draw. Now we'll come into the income part. Income is not really a problem, because income is more like how should I put it? Their income is always sales. For SMEs, their income is always sales. They rarely have other income, unless probably there is part of the shop that is rented out, but they rarely have other income. Where our major problem lies is expenses. This is our major problem. So today we are going to look at three things. One, how to do the expenses, the income, the inventory control, because that one is always a problem. Some persons find it as a problem, but it's not a big deal, but it can always be a big deal depending on how you want to see it. So we'll look at the expenses, we'll look at the income, we'll look at the inventory control, and we look at the inventory valuation part of it. Now let's start with the income. The routine income is sales, and the sales, before you start saying that you have a product you are selling, you should have a price list. All right, so let's assume we have a price list of, let's take Fanta, Coke, Sprite, then RC products. We should be RC Fanta, RC Cola, then RC Lemon, then probably we'll take Biggie again. Let's say Biggie Orange, Biggie Cola. Probably we can just take Biggie Apple, and so on and so forth. So let's assume these 9 products here are okay. Let's just take one Lacasera. Let's assume these 9 products here are the 10 products here are the products we offer. Now amongst these 10 products, you will agree with me that these 10 products, each of them have their big and their small. They have their big and their small, and the prices are not the same. So I'm going to have some persons will put something like big Fanta, then big Coke, big Sprite, and so on. Some persons will use B, S, and B and S to signify the big and small, and so on and so forth. But whichever way you want to do your stuff, one thing with accounting, however you want to do it, wherever you want to do it, and with which company you want to do it, is consistency. As long as everybody knows that B is big, S is small, and so on and so forth, you don't have a problem with it. The problem will now be if you continue writing B and then all of a sudden you start writing big. That is when we have a problem. So let's assume we will be working with this 14 for now. A lot of companies have inventory about 100, 200 pieces and so on and so forth, but that's by the way. Now we are looking at how to control the inventory from a glance. So we're going to create a table, right? The table will automatically tell us that on day 1, so inventory was purchased, so inventory was sold on automation. On automation, you don't need to do anything there. You just have to just connect them. So when you record your purchases, automatically the quantity from the purchases will reflect on the inventory dashboard and automatically update itself to tell you the number of inventory you have as at that day. Now, how do we start? Every day you start with an opening inventory, right? So we have opening balance. You can have opening BAL. Then the next we are going to have is purchases. Some persons call it addition, whichever one. Some people will put total here. I prefer putting total for easy computations. Some persons will remove total. Then we'll have sales. Then we will have closing balance. Now, this is workable. This table is workable when you are running just one site. When you are running just one site. But if you are running multiple sites, and there is an avenue of transfer between the head office and the branch, or the branch and the head office, then there will be a need for another column for transfers. So you have transfer in, and we'll have transfer out. We have transfer in and transfer out. So I'm going to merge this place and call it, today we are in July, so maybe this should be 1st July 2025. So today is 1st July. Let's use this as 1st July 2025. Now, having set this now, you know that if we continue building this and going forward, if you want to get 10th July, let me do a small sample so you will understand. Let's say we do this. This is second. We do third. This third, fourth. Now this is first, this is second, this is third, this is fourth, this is fifth, right? And this is sixth. Now you see that before you reach, you want to pick a figure from 18th or 19th or 20th. You'll be scrolling and it's not necessary. So what do? There's what Excel call grouping. So you come here, you highlight this column, from this leaving only the last column. You leave only the last column. Then you go to your data, you go to group and click on group. Once you click on group, this thing will show here. So when you click on it, it will bring them together, and you just have, the only information you need is, as at first, how many inventory do we have left? It is showing. You do the same thing again. You group it. Once you click here, so at a glance, you can see the closing inventory of all these tables. So if you want to go to 13 or 14, you will not be traveling up and down. If you want to check for a particular day, you go to that day, click on this plus sign, it will open. You will see the details of everything that happened that day. When you are done going through it, you click on the plus sign and it will close it back. So that is that for that. Why I'm doing it briefly is so that we all will be following and spend so much time on a particular section, because we have a lot to cover, so I don't want to spend so much time on a particular section. Now, like I said before, if you have a question, please put it in the comment section. During time for questions, we will attend to them. Please put it in the comment section. We'll attend to all the questions when we are attending to questions. So, back to what I was saying. Now, having grouped them, we are done grouping this one. Another thing we will do here is to give this table a heading. So we'll come, highlight all these, bring them down, and you press Ctrl T. When you press Ctrl T, it will bring us this place saying create table. There's a little checkbox here that will say my table has headers. You click on it, that your table has headers, and you press OK. When you press OK, Excel will beautify your table like this. Now, what are you going to do? If you don't like this color, you can come up here at the table design and choose any color you like. You see, as I'm just hovering around them and the colors are showing. You can as well click for more colors and continue till you get the color you like. So for this, I will be using this color. For this style. I'll be using this color. Now, after that, you have designed your table, you have done the flow. This is for the inventory dashboard. Now, when you finish setting up your inventory dashboard, maybe you set it up for the month of now, assuming you want to do 1 year. There's what we call grouping of row. Call it grouping of row, where we have this for July, Abi. So we highlight everything for July, and we go to data and we group them. So when you click on this minus, it will disappear. If you click on plus, it will show, and we'll call this one July. Now, instead of stressing yourself again and repeating the same inventory, what do? We just copy it from beginning to the end and produce it again. It is advisable to give 3 spaces after the previous month. So you paste it, and then you can come here and correct it to August. One thing with date is that once you correct date of the first one, you drag the cursor from where it started to where it ended and as you can see, the dates are automatically changing by themselves. The dates will automatically change for you. So we've dealt with the dates. If you don't like the handwriting, I prefer Arial Black or Times New Roman. You can highlight the entire page, click on write up, and change the handwriting to whichever handwriting you love so much, and it will reflect automatically for you. Now, I think that is that for the grouping and the inventory vault and the inventory dashboard. Mind you that once you finish grouping it, before you copy it, it is advisable you finish grouping the first one, finish all your adjustments in the first one, then you copy it and start putting it in the subsequent ones. Why are we leaving extra spaces below? Just in case you want to add more inventory, you will just come here and add a row. Once you add a row, you add your inventory. Some persons used to take this last row here and paint it red. You just paint it red or paint it yellow as a signal to say that July ended here. July ended here. So if I want to add any other inventory, maybe today that is 20th or 21st, the MD CEO introduced a new set of products. I'll just click on this, insert it, and that continues. So that is that for the inventory part. Then, having dealt with this inventory, we will go to purchases. The same system we used in this inventory is what we will use in purchases. Sorry, before we enter purchases, does anybody have any question? If you have a question, please let's attend to your questions before we move forward on this inventory that we finish now. Does anybody have any question? Does anybody have any question on this inventory that we just treated? Okay. Mr. Taiwo.
Okay, my question is the first one, this one you just finished, that's inventory.
Yes, sir.
Can we practicalize it? Can you just put some items and let's see how it's going to automate? Maybe you can when you type some information, you can copy somewhere. Then we now see how you can replicate to second, third, fourth, fifth, sixth. As you said that once you group, you don't need to be creating for each day. I just want us to see how it works.
Okay, no problem. Thank you very much, sir. Now, on that part, we've not gotten to that level, but since you brought it up, I can just do a small display for you since you brought it up. But we are supposed to link them directly to the sales and the purchases that we've not yet created. On this place, Excel works with your regular Excel functions. So let's just assume that we'll work on assumption now. So basically, after creating all the other ones, the outline and the beautification, what we were supposed to do next is to impute the Excel functions. So here I'm going to put equals, and I'll add the opening, the purchases, and the transfer in to give me the total. And that would come to closing and do equals the total less sales less transfer out. So as you can see, automatically computer did the maths for the rest of them. Computer have done the maths, and you can choose to continue repeating these functions, or you can choose to start from the opening balance, copy it to the closing balance, and copy it, highlight every other column to the last one and paste, and computer will do the maths for you. Now with these Excel functions, now assuming when we put our opening balance as 3 and when we put our opening balance as 3, automatically we already have 3. We'll put our purchases as 4. 7 is automatically showing, abi. We put our transfer in as 1. We have 8, abi. We put our 8 as 4. 4 is showing. Put our transfer out as 2. And that's the end. So that's how we'll keep replicating it till we finish it, till the end of the story. So, but I believe I've answered your question, Mr. Taiwo.
Yes, please, you can go ahead.
Thank you very much, sir. Any other question from anybody else? Okay, I believe there's no question, so let's continue. Now, but I'm going to wipe this now because we've not gotten to this level. What we are planning to teach this evening is how we can get these purchases and this transfer in filled automatically when we record purchases in the purchases day book or in the purchases ledger, because most people have purchases record, just one purchases record, whether they want to refer it as day book or they want to refer it as ledger. All they shall know is that they have where they record their purchases, and what they shall know is that they have where they record their sales. Now what we are trying to show you is how these purchases, when I record purchases in purchases ledger, it will come here automatically. Now we've done this. For this one, we are going to do the one of purchases so that we all will see it. So the same way we did the inventory dashboard, for the items, we'll copy the items and we bring them in. So we'll bring them in. Now, having brought them in, purchases is going to have their own set of variants. So we can have quantity, unit price, amount, quantity, unit price, amount. Now if you people have vendors that give you discount based on the individual item purchased, you can put discount here. Some persons put discount, some persons put payment terms, some persons put whatever they want to put, but quantity, unit price, amount are the 3 basic things that must be here on your purchases day book. Are the 3 basic things that must be here on your purchases day book. But you will see purchases day books that will have things like payments. You will see some that will have discounts. Then they will now have discount, net amount, discount, net amount, then payments comes in. Now for this, let's assume we bought, some will have what we call batch. Batch is drinks like Fanta come in crates. So Fanta is 12. In fact, virtually all the drinks here are 12 in their crates. So their batch will be 12. So basically, we already know that you bought 3 crates, and each of the crates is containing 12 bottles each. Now, on the inventory dashboard, what will be reflecting in your purchases is this 3 multiplied by the 12 to give you 36. The 3 multiplied by the 12 to give you 36. Automatically, once you put that function, automatically it shows itself. Automatically. Now, let me give you another one. Let's say this one is 7. You go to the inventory dashboard, automatically you have 84 here. So, like that, the computer continues to recognize these figures and computes them for you automatically. The computer will continue to recognize these figures and compute them for you automatically. Now, let's assume we bought it 4,500 each. The amount, for the amount column, you have to multiply 3 by 5 to give you 13,500. Note that once you finish setting up these things, the only thing that you'll be changing once you finish setting up these things is your quantity, your unit price, and your discount. The rest will be coming automatic. Your quantity, your unit price, and your discount. So let's assume we are done for this one. We'll merge it, we'll call it 1st July 2025. So maybe we'll do it again for 2nd, 3rd. Let's see if we can have, okay, we have till 6th. So the same way we inserted tables in the other one, we can as well insert tables, and can as well insert tables. You can click on insert and click on table, and the same thing will show, and you will say my table has headers, and click on OK, and your table will automatically have headers just like that. So for your net amount is going to be your amount less your discount. Then the payment status. For this payment status is whether it was purchased on credit, it was bought cash, you paid through bank, and so on and so forth. So this is for the payment status. Some persons don't add this. Most people add it. But what we are trying to say is that whichever accounting information system you decide to adopt shall be consistent with it. Alright, so now once we link this purchases quantity, you know, on the inventory dashboard, we are not interested with the financial involvement. We are interested in the quantity of the inventory we have on ground. The quantity of the inventory we have on ground. So how do we go about it? We can now say, okay, for this is this plus this plus this. Automatically computer will fill in the blank spaces for us, to fill it up for us. Then we can say, okay, this minus this minus this. So whatever you are recording on this purchases sheet now will automatically be reflecting on this inventory dashboard. Whatever you are recording here, let me add 10 here. You will see that we have 120 bottles here automatically. Now, the same way we have this for purchases, we have it for sales. We have it for sales. So we can build our item. Quantity sold, amount, unit price, amount. Maybe let's say we have discounts. Let's say we have net amount, and then we have payment status as well. So basically we'll just copy the inventory again and come here, copy this, put this here, and we build our table just the way we built the other one. Build our table just the way we built the other one. And that's it. We have our table. Now, once we link, let's assume we added batch too. Let's say but most times we don't add batch in sales because sales is in pieces in most cases. But then let's assume maybe they sell both in wholesale and retail. If they sell both in wholesale and retail, that's when we'll add batch here. Then we can now say, okay, this is our batch. Then the batch here will not be static like in purchases. So the batch here will not be static. Either the person is buying in pieces or the person is buying the whole pack. So let's say the person bought one, that's the person bought in pieces and he bought 10. So you put one under batch and put 10 pieces under quantity. You go to the inventory and you link them. When you link it, automatically everything is reflecting. And the beautiful part of this is that as it is showing, Excel is doing the computation, whether it is addition or subtraction or whatever it is Excel wants to do. Excel is doing it and your closing balance is showing automatically. Now, I think with the information we've done, to build sales table and purchases table is exactly the same thing. So there's no need for stressing so much time on the sales table. Since we've done purchases table, there's no need for stressing much time here. So I want us to digest it and ask our questions before we move. Is there any question from anybody before we move forward? Do you have any question? Okay, Miss Favor. Miss Favor, please, can we have a question? You raised your hand. Miss Favor, Dosumu Favor, you raised your hand. Can we have a question?
Evening.
Good evening.
Good evening. So I would like to know how you doubled the sheet into different states, because I missed that part where you doubled the dates.
Which part of it? The one of the individual dates or the part of the one where...
Under inventory dash.
under
So you double
inventory.
the date into,
You mean
yes,
here, this and this, Abby? The August and the
yes,
July, Abby?
yes,
Okay, there's nothing
yes.
magical here. We just copied what we have for July and brought it down to August. So we said that the
Oh,
the tradition is that you leave three spaces. You leave three spaces after your last line, and your last line in any group should not contain any inventory item.
okay.
So that if you want to add an inventory item, you will just click on the last line and the insert row on top of it. Automatically, Excel knows what to do. Do you understand me? Can you hear me, ma?
Yes, thank you very much.
Good. So,
Yes, I can hear you. Thank you.
I believe I've answered.
Yes, thank you.
Okay, please, you can bring your hand down now. Is there any other question before we continue? Is there another question before we continue, please? Okay, in the absence of further questions, let's move on. Now, we've treated the inventory control. Trust me, when you build this for the whole 1 month or probably for the whole 1 year, it takes a lot of time to construct. Yes, it takes a lot of time to construct. But when you're done constructing it, maybe for a client company that we are setting up the internal control system, for 1 year, we use a week or maximum of 2 weeks, no matter how big your problem is, maximum of 2 weeks, we'll finish setting up all these things we are showing you now. We'll set it up. While we do 2 weeks is that we will set it and we will test run it. We will set it on Excel, test run it, upload it on Google Sheets, still test run it again before we give it to you. So, and most times you will be test running something and then you get a call from another client and you have to go and answer. So that's 2-3 hours that you've left the office. It's still part of your 1 week that you're supposed to use and build this thing. Alright. So it's not as if it's a big deal. It's something that if you sit down for 2 hours, you bring it out and it will be very lovely. Please use any color of your choice. Colors are not limited to any accounting standard, so use any color of your choice, use any format of your choice. The most important thing is consistency. All right, so now we've treated inventory. So whenever you buy or whenever you sell or whenever you transfer, your inventory dashboard will automatically show. Now the next thing we are going to look at is what we call the daily reports. In the daily reports, no, before we get to the daily reports, remember we said something about revenue. Our dashboard said revenue, expenses, assets, liabilities, capital. So let's treat the revenue now. How do you report the revenue? Let's assume we sold one Fanta. We did not sell any Coke. We sold two crates of Sprite. We sold one crate of small Coke, and so on and so forth. And we now want to report the revenue, because at the end of the day, if your inventory is accurate and your revenue report is not accurate, then there is a problem, right? So we want to report the revenue. Now, how do we report the revenue? We have our daily summary. The daily summary will consist, it's more like a trial balance, but it is not a trial balance. It is just your summary. So we can have something like purchases. We can have something like purchases, sales. Some people say sales first before purchases. Some people say purchases, sales, whichever the way they want to do it. Expenses and profits. This is a daily summary. You have the individual days, 3, 4, 5, 6, 7, 8, 9, and so on. So I'll just fill this automatically because we don't have time. Fill this automatically. Now, from your sales summary, when the CEO calls for this thing, your sales summary can also show companies that have discounts. For example, your daily summary should have your discount. So I should have things like sales discount, then apparently I will have something like my net sales, then purchases, also purchases discount, maybe apparently net purchases, then probably expenses and so on. Now, expenses that come here are usually cash expenses. Expenses that come here are usually cash expenses. Those bulk expenses don't usually come here. But even if your bulk expenses come here, it's no problem. But expenses that usually come here are cash expenses. Now, at a glance, you will see, okay, this is what we want to do. Your sales here would have your total net sales for the day, your total gross sales for the day, sorry, not net sales, your total gross sales for the day, which is something like, it's either you create a total column, or code it like that. You either choose to create a total column or you code it sum of everything on the amount. Then you do the same thing for discount. Your net sales is now going to be this minus this to give you this. So the same way you treated sales is the same way you will treat purchases. Then your expenses, we've not created the expenditure journal. So your expenses will carry now carry the total expenses for each day. However you want to present your expenses, that is what it will look like. And individually, these things will be linked one by one till 31st of the month, every month. Now, when the owner of the company is asking for his report, he's just coming to this sheet. People that have stock that's there's possibility of damages, you can create column for damages here as well. Let me remove this profit. Let me put damages. Damages also come in here. So basically, it's just a combination of everything the owner of the business wants to be seen on a daily basis. So you just present it for him here and make it a table. Use Excel functions to link them. And so on and so forth. the Excel functions to link them, then you make it worth it. Now for the whole of July, your oga no longer needs to be asking you. Your oga no longer needs to be asking you, have you done your reports? When he opens this place, whatever it is you've recorded automatically will be reflecting here. And the beauty of it is that, okay, let me give you an instance. Okay, this. Let's assume the price of all this is 2,000. Now automatically, if I record 2 crates of Coke, I automatically have 48,000 naira here. So once I record 2 crates of Big Coke, I automatically have 48,000 naira here. This 48,000, assuming I filled up these places, it will automatically be reflecting. Okay, we filled up number 1, Abi. Now we have 14,000 naira here. Let me tamper with the information on 1st of July so that we will see. The sum here is 140,000. So let me remove this and remove this. Let's come to daily report. Automatically this has reduced to 68,000. If I go back and add them back, automatically it will come to 140,000. The same thing happens if you've coded purchases. The same thing happens if you've coded your expenditures. Your daily report will just be here. So basically what we do is that this daily report, when we put it on Google Sheets, we lock this place. After putting all these functions, because everything here will be function, we lock this place. I'll show you people how to lock it. I'll show you people how to lock it when we get to the Google Sheet part of the class, so that all of us will be following why we will prefer Google Sheets over Microsoft Excel. In Microsoft, you can still lock it. The only problem is that Microsoft is paid for, and some persons will prefer just paying for QuickBooks or Pitch3 or a regular accounting software instead of going through all this stress again and start paying money because of the online version of it. So since 365 is being paid for, people will prefer the free version, and the free version is Google Sheets. So basically, having done this now, we'll look at the purchases again. Let's go to the daily report. We would say go to the purchases, and that's it. While I do the same thing for discount. and so on and so forth. So this is what we have. Now let's go to purchases and play with it small. Let's add 7,000 here. Automatically we've added 70k, and this 70k will reflect in the daily report. So your purchases has increased from 83,000 from purchases have increased from 13,500 to 83,500. So basically you will see that in a day or 2 days or 3 days that you bring out to set up these things for yourself and keep them, subsequently when you are making accounting entries, you want to prepare reports, your reports will be accurate and they will automatically be updating themselves without you stressing yourself. Now another important thing with Excel is that Excel is one document. Why did I call it one document? You can finish building this thing as a template and you will keep it. Anytime you want to use it, you will copy it from the folder where you kept it as an empty template and paste it in a separate folder where you want to stay and use it. The duplicate copy will work perfectly fine like the original copy. So it is no longer anytime I need. There are some specifications that we already have their Excel templates because we've served clients that have exactly, when we look at your internal control system and we've served clients that have exactly that same accounting information system, obviously we'll have your accounting information system templates stored somewhere on Google Cloud. So we'll just download them, adjust them, and something that is meant to take 2 weeks will just take 3-4 days. Download, adjust, test run, and upload, test run again, and you are good. So you will see that once you finish building the first one and store it somewhere safely, when you need it for a different thing, you can just go there, download it, or copy it with Flash, or copy it to the folder if it is inside the same computer, and make whatever adjustments you want to make there and push it. So I think we are done with the purchases, the daily reports. Let's go to the expenses. Now when we come to the expenses, okay, or maybe before that, is there anybody with any question? Is there anybody with any question, so that I'll attend to your questions before we move forward. This is a 2-hour lecture, so I'm trying as much as possible to manage time so that I will not. It's not about teaching, it's about the people you are teaching to follow whatever you are saying. Yes? Somebody's hand is on. Please, if you have a question, please ask. We are running out of time. Any question, please? Can I move on? Okay, I think since nobody is responding, let's move on. Please, if you can hear me, confirm you can hear me by raising your hand. Let me see. Somebody said she's not hearing me. Please, if you can hear me, just raise up your hand. Let me be sure everybody can hear me. Please, if you can hear me, confirm you can hear me, please. Some persons are complaining on WhatsApp that they cannot hear me. If you can hear me, confirm you can hear me. Okay, so I will believe this person's network is dealing with her. Okay, thank you. You can bring down your hand now. So I said we can continue, Abi. Those that, since we don't have any question, let's do the expenditure part. Now, on the part of the expenses, one might say that the expense table does not have a format. One might say the expense table does not have a format. Why? Because some persons will tell you something like, okay, let's use dates, details, total, and then probably the individual expense heads, right? So we can have things like office expenses, cleaning and sanitation, rent and rates, and so on and so forth, light and heat, sundry expenses, and so on and so forth. So you make it a table and just make it a table and you are good. Just make it a table and you are good. So basically, under the expenses now, what makes it special? The total starts from this first office expenses and covers all these expenses till the last one. But expenses is dicey. Why did I say expenses is dicey? Under expenses, we are looking at, some persons can say they will put first here, second here, third here, fourth here, like that, fifth, sixth, seventh, eighth, ninth, 9, and so on. Now when you put it like this and you have, maybe you bought akara, you bought detergent, and then the same day you paid light bill. Also the same day you made some expenses you believe will be sundry expenses, and so on and so forth, and you are now posting them here. You are now posting them. Maybe your office expense is 2,000. Your detergent, you bought 500 naira detergent. Maybe your rent is 100,000. Your light and heat is 50,000. That is your NEPA expenses. Maybe you take your sundry to be 5,000. Now, at this place now, an external auditor who comes will find it hard to trace which particular expense to the particular detail you wrote here. They're not going to write it like this now. They will write exactly what they bought. So maybe tissue paper and so on and so forth, and write it here. Now, the external auditor who sees this will find it hard to comprehend what you wrote here. The auditor will find it hard to comprehend because the auditor will be trying to understand. I don't know. So which one is which now? And the essence of accounting information system, like we said yesterday, is to have a system that even if you wake up tomorrow, maybe you are working in Donsima and Sons Nigerian Limited, a small trading company in, yes, whose hand is up? Do you have a question? Mr. Taiwo, do you have a question? Okay, no problem. So now let's assume you are working in Donsima and Sons Nigerian Limited, and then all of a sudden you got an offer. Maybe your salary was 300,000 as an accountant, and then maybe you got an offer of a salary of 1.5 million from McKinsey and Company, or maybe PwC is calling you to come and work with them at 800,000, and you've looked at it and you've decided to resign. Now, for you to say you have a proper accounting information system, is that the information flow or the accounting structure you have there, whoever it is that is coming in to take over from you will only have very few questions to ask, and the person will fit in well. So when I come into a place and then maybe we are preparing the client for tax audit, and I start asking the accountant questions on last year or last 2 years, and he will start telling me things like, I was not the accountant then, it obviously means they don't have a good accounting information system. When we finish treating that tax matter that brought me, we will revisit their accounting information system because they don't have a proper information system. So what are we supposed to do? Here we are going to have 4 columns for first, 4 columns for second, 4 columns for third, 4 columns for fourth, 4 columns for fifth. We're going to have 4 columns each, continually till the 31st. Now, if you have more than 4 transactions, more than 3 transactions in a particular day, you can easily insert row. So instead of scattering this thing like this, we would come here and say something like detergent, clean and sanitation 500. Still on the same first, we'll have electric bill, go to light and heat, 50,000. Still on the same first, maybe we have rent, 100,000. So come here and put rent, 100,000. Now this is the 4th one. Okay, let's assume we have just these 3 transactions. After this, we'll have this total. This total will be a combination of while these individual totals will be sum of starting from maybe this D going down to this place. So automatically you do it the same way. Like that, like that, like that. This last one, we normally paint it. We used to paint yellow, green, red, just any color that will match with this our table. Paint it. But it's going to be a different color, so that once you see it, you know that, brother, you're on the boundary. Oh. Like this now, you dey boundary like this. So if I want, assuming I have more than 3 transactions, this one that I painted is where I will click and right click, insert my row, and every one of them will go down automatically. And whatever I fix anywhere, I can still drag this formula down like this. And whatever I fix anywhere will automatically reflect here, which this total is what will automatically reflect in my daily report. This total is what will automatically reflect in my daily report. So I think that is that for that. So now when you set this your daily report is where everything will be showing at a glance. So your expenses will be showing on your daily report, your income will be showing on your daily report, everything that is happening should be showing on your daily report. Now when we are done with this, you can now say, okay, let's go to the income now. The income is straightforward though, actually. The income is straightforward. There's not much. There's not much. Yes, whose hand is up? If you have a question, I would like to attend to your question. Yes, Mr. Daniel.
Okay. Thank you so much, sir. I want to ask a question based on this. What if they say that the multiples of expenses? That the expenses can range it like in a hotel, a very big hotel, where they say they incur a lot of expenditures, ranges from transport, it can be buying of a pepper, buying of something else, and they sometimes do something online and have a lot of expenditures. This one is just shows now is absolutely like is a company that have a straightforward expenses to this is what they actually they and again, second question,
Okay, okay. So if I understand you correctly, your first question is when we have multiple layers of expenses. Mr. Taiwo, I've seen your hand, but just give me time. I'll attend to his questions and then I will receive yours. All right. Thank you, sir. So you can leave your hand up while I attend to his question. Now, your first question is uh, when we have multiple layers of expenses, right? It leads me to the accounting that we all did in our 100 level that calls for classification of expenses. I believe everybody did that when we did principles of ledger. So everybody did that. When you look at the expenditure at your discretion, you classify the expenditure and fix the figure under the expense head required. That is why we have details column where you write the details of the expenses. So if you bought bread, for example, and you classify it as, maybe you decide to classify it as sundry expenses, then under details column you tell us you bought bread. When the auditor comes or the external person visiting you comes, the person will now revisit the detail column and cross match it with the accounts head. If the person, okay, yes, Mr. Taiwo, you are correct. The chart of accounts determines the account head, but in a system where you are the, in a process where you are the one building the chart of account, because what we are doing here now, we are indirectly building the chart of account. We are building the chart of account, and when we are done, we are going to draw all these things we are building here and send them to the trial balance. When we are done with what we are doing now, we are going to draw all these things we are doing here and send them to the trial balance. Now, from the trial balance, you will now be seeing that after linking all of them, your individual daily transactions will automatically be reflecting in the trial balance. So, but we've not gotten to that yet. Now, at your discretion as the accountant, you will look at these expenses, look at this transaction, and use your knowledge on accounting and decide the accounting head you will classify it. Sha make sure say whatever is the accurate and exact thing that transpired with respect to that transaction, that took place with respect to that transaction, was recorded properly in the details column. So you detail out everything that happened in details column. So I bought bread, Abi, no problem. Write bread for me here under details column. Then classify it the way you want to classify it. Now, for your second question, the daily report is something that is very is constant in hotels, bars, restaurants. I've seen a lot of them though. Now, some CEOs have a way they want their daily reports to be. Yes, you're not supposed to drag with your boss. In that situation, we do what we call import range on Google Sheets. We do what we call import range on Google Sheets. In import range function, we create a new document. Say you say your daily report should be just sales, purchases. Some CEOs will say that they want their daily report to include cash, bank, discount, complimentary, and so on and so on. Fine. This daily report I did here is the standard daily report, but a lot of CEOs will disagree with this daily report the way I did it.
Thank you. Thank you so much. You get my point.
A lot of CEOs will disagree with this daily report the way I did it. This is the standard daily report. This is standard daily report.
Thank you so much. You got my point.
But a lot of CEOs will disagree with this daily report. Why? Because the thing is that the owner of the business wants an information that he can understand. And sometimes when we finish carrying out accounting services for client companies, sometimes we submit two reports. We submit the oversight report and we submit what we call CEO's report. Now, in that document we call CEO's report, when you read it and read the oversight report, they are the same thing, but they are not exactly the same thing. In your discussion with the owner of the business, you will be interested in those key things he wants to be seen in his report. Identify all of them. For a hotel, for example, this daily report will not fly. This daily report is a standard daily report for all trading companies, but it can't fly in a hotel, especially a hotel that has a club. It won't fly. So the ones that will fly is after all these ones. Now you are going to add cash at hand, you add transfer, you add POS, you add complementary. If you do not add these three things, you are wasting your time. You're just taking your time. Okay, I wanted to talk about damages, but we already have damages on our report. So these things, the CEO wants to know how many complimentary did I sign yesterday? Because sometimes themselves, when they are in the club, themselves they don't hide join self. They have taken one or two alcohol and they are tipsy. They don't even know when they don't sign complimentary, sign pass where they're supposed to sign pass.
Sure.
So he wants to know the exact amount of complimentary that was signed yesterday night. You must show him. So all these things. So the thing is that, like I said yesterday at the beginning of the lecture, you need to understand that accounting information system, we have accounting principles guiding how you prepare your accounting flow. But that does not mean that there is a specific way that it must be like this. No. So what do we do? In this situation, we bring the accountant to an understanding and we show him a secret source that we use for our clients. We call it import range system. In import range system, we have a second document that we show CEO, we show Oga. This one is Oga's document. This one is accountant's document. Now, in accountant's document, those items that accountants can understand will be the one in the document. We will now use Excel functions to create Oga's document so that from the records, computer will automatically be updating Oga's documents for him. Do you understand what I'm saying? So if Oga wants to be seeing sales, purchases, total expenses, cash, transfer, POS, discounts, complimentary, that's what he wants to be seeing. That's what you'll be showing him. So your daily report will look like that. But the internal daily report that an auditor wants to see when he visits you in a trading company is this thing that I'm presenting now.
Oh.
So you will not do Oga's own and leave auditors own, because when external auditors come, you will have a lot of questions to answer and you will now be looking as if you don't have capacity to be in the office. So what I advise people to do is, if you cannot, for me, if I'm the one running it as a person, what I'll just do is to create extra column. Oga, you say you want to be seeing discount, Abi? I'll put discount. You say you want to be seeing complimentary, Abi? I'll put complimentary. Which one do you want again? Okay, you want returns, Abi? I'll put returns. Everything Oga wants to be seen is there. The one auditor, which one do you want? I'll put it. I'll do the standard one. All those ones Oga wants to be seen, I will add it inside and leave it there. Then, when I'm displaying my report for Oga, there's what we call hide column. You will just hide all the columns that belong to the auditor. So, auditor wants to be seeing net sales, Abi. Oga, nothing concern Oga and net sales. So I'll just click this and hide it. Nothing concern Oga and net purchases. He does not understand what it means. So I'll just click here and hide it. So what do we have? We have sales, discount, purchases discount, expenses, damages. Maybe we'll now come and put cash, we'll put complimentary, we'll put transfer, we'll now put POS. We are finished. So we'll show with the way this report is like this now, Oga will accept it. You understand what I'm saying? Now, in the long run, if I want to present for auditor, I'll just, all these ones that belong to Oga, that is not part of the standard, I will highlight all of them and hide it. Just hide. Piam, auditor, your own is net purchases, Abi, and net sales, Abi, or you see your own. Shall we continue? Shall we go on? The auditor from external audit or from tax audit or your tax compliance manager, you just show him this one like this, and everybody is in peace. So the internal control system you decide to impute is in your hands as an accountant. Sometimes when I hear accountants arguing financial representation with the MD CEO, I will laugh at you because you don't know that whatever you are doing as an accountant, whatever standards you apply, as long as the owner of the business you are working for is not satisfied with what you did, you didn't do it well. If you like, be prize winner from ICANN, be prize winner from ANAN, be prize winner from ACCA, have 350 million professional qualification, nobody cares. As long as your oga, the CEO of the company you are working for, says what you did is rubbish, I lost 2 clients to learn this thing I'm telling you now. That was what made us start doing CEO reports. Some CEOs did not go to school. Forget I'm doing my masters in accounting. I have a HND in accounting. I have BS in accounting. I carry qualification up and down. I have CPA from ICPA and this and that. You don't consign them. They are not interested. They're not interested. They employed you because they know you're a professional. So when you are doing your financial representation we call it for internal consumption. We call it CEO's report. In bracket, we put for internal consumption. That one, IFRS, concern IFRS. Standard, no dey inside that one. Even gap sef, concern gap. We are preparing that particular audit report or accounting oversight report or forensic accounting report for CEO's consumption only. We are preparing it in way and manner as our CEO, the owner of the company that contracted us for this business, will understand. Chikina. So you cannot come. I had a club that I was running that time. In fact, There were 2 partners. One person had a PhD in accounting. The other person did not go to school at all. He did not finish ND. He was in ND2. Maybe he said somebody died. I've forgotten whom the person he said died. From there, he could no longer afford to continue. He now started doing boy. From boy, this one, that one, that one. You know how all these Igbo men used to grow in business. And that is it. He's a billionaire. That's his own cup of tea. He did not finish ND. When I'm coming to that club to submit reports, do you know I used to bring 2 reports? So the other one will be a complete audit report following IFRS standard, because I know the PhD holder is waiting for me to use question and finish my destiny. The other man that did not finish ND is not his business. There are key things he's looking for in his report. Once he sees it, okay. If you like, do graph, do this one, do that one, do budget and estimation, do your financial projection. He will tell you, I don't understand all this English. Oh yeah, call me video call. You will explain yourself. Call him video call, and you start reading your report for him from page 1. You and your client will read the whole 40 pages of reports together. Something you give to him. So these are situations that we have seen, and we're saying, look, why don't you just do your standard audit report or your standard financial statements that you will keep when Federal Inland people come, or your state board of internal revenue people come. You have a report to give them. That one is standard report. Then your oga, since your oga has specific things he is looking out for in his report, just prepare CEO report and give to him. Now let me tell you, if you automate all these things in your accounting information system, you will have more than enough time. Even if you want to be preparing 80 reports every month, you will have more than enough time to prepare 80 reports. So the thing is that at a certain level, you tend to understand that all these things we are doing are in way and manner that we can always keep our clients or our company owners happy. Because as long as the person is not happy with your stay there is a waste. And then in the meantime, we are looking at how to make this job easier. Because take it or leave it, you're an accountant today, right? And you enjoy what you do, right? But then why will you not just reduce the stress on your end? Remember what we said yesterday was documentation, accounting flow, and information accuracy. If you are saying you have 20 motor vehicles, the 20 motor vehicles should have documentation backup. If you are saying you bought 5,000 crates of malt from Nigerian breweries, there should be an invoice to show you bought 5,000 crates. If you said you sold them, there should be an evidence where you sold them, whether you received the money cash, or you received it through bank, or you received it through cash, you received it through bank, or you made a credit expenses. Now that reminds me about credit. One thing auditors and accountants should look out for are credit, income. Let's forget about expenses. Expenses are always verifiable. I mean, when the person will come to collect his money, then the two of you will trash it out. But credit, income on credit, I'm talking about accounts receivable. Those items are things accountants should sit down and look out for. A lot of accountants in a lot of hotels, a lot of clubs have lost their jobs because of pilferages they know nothing about. I've been in a forensic job where the cashier will receive cash, write it off as expenses, and spend the cash for personal use. You know, there's a way we found out though. That one is part of our own. That is why we are forensic auditors. There's a way we found out. And then at the end of the day, the oga said, yes, it is true. Cashier stole this money. Yes, cashier stole this money. Cashier was arrested and was sent to jail. This one, that one, that one. The money is big, oh. When we summed it up, the money is big. The money was rounding plus or minus 2 point something million under 3 months. Because these are things that she will take 20,000, 15,000. Another 6 months, the girl don't chop 2 point something million. In a span of 6 months, cashier don't chop 2 point something million. The man got angry and sacked the accountant, sacked the manager. Why? He said cashier reports to the accountant, and the accountant received this report without knowing the report is incorrect, which means the accountant is incompetent. So why we are doing all this is for accountants to understand that sometimes it may not be your fault. You may come into a system and you see an internal control system there, you see an accounting information flow there, and you just start dancing to the tune. No, it's not done that way. If you come into a system and you see an accounting flow or you see an accounting information system that is not proper, there are leakages in the internal control system, speak up and start making changes. It's not about speaking up, that's the problem. Start making changes. If I come in as the auditor now, I say, oh, okay, wow, we put down you to take stock. Are you serious? No, Batman, you gotta take stock every day. Lie, you gotta take stock every day. Starting tomorrow, you gotta take stock every day. And one thing I used to do for hotels or clubs, in fact, we do this one particularly for clubs and restaurants. We do this one for clubs and restaurants mostly. That up till now, we still have clients in Enugu that I'll just call the other and be like, I go like touch your side though. Alpha, the man will send transport money. I'll enter bus, start coming to Enugu. By the time I'm getting to Enugu, it's around 6 p.m. I will need to sleep, rest, this one, that. Before I get myself together, it's around 10 p.m. The only person that knows I'm coming is the MD CEO. Around 1 a.m., you see me inside club. The next thing you hear barman say is blood of Jesus. As club they finish by 3 a.m., I dey count stock with barman. Because I'm done taking stock, I have my figure. Put it in my pocket, I'll be going. Whatever barman is saying about drinks that I did not see, barman will explain. So these are things that if you don't set up these surprise tactics as an internal auditor or as an accountant, you can't be a sitting accountant that is doing 9 to 5 and your cashier has access to cash. No. You can't be a sitting accountant that is doing your cashier should receive cash and remit the whole cash to you. If you have floats, you people have float or imprest system that you people manage, it's fine. The imprest money should be separate from the cash the cashier is receiving. It should be separate. Once you mix them up, you will not even know where your problem starts from. So I think that is that for that. So for the sake of time, let's move to the income and let's treat the income. So on the income level now, we are looking at how much was made as revenue. Amongst the revenue, how much did the company actually receive? You know, there are two different things. The company might have sold goods worth 1 million. Then inside that 1 million, the company gave a discount of 100,000. You know the company is meant to receive 900,000, no longer 1 million. And then maybe inside that 1 million, maybe 10,000 naira, probably one bottle of Jack Williams was given to somebody as complimentary. Because maybe the person covered a bill of 500,000. Then the guy will be like, go and give him one Jack Williams to go with, he's doing well. So our estimated revenue has reduced from 1 million to 890,000. And then maybe inside that 890,000, 90,000 is credit. So how much did we actually receive? We received 800,000. Now, for every credit sale, there is 50% chance of bad debt in regular trading companies and 95% chance of bad debt in clubs. Let me repeat it again. There is 50% chance of bad debt in a regular trading company and 95% trading chance, 95% chances of bad debt in clubs. So when we're talking about this one, I'll tell them your provision for bad debt in a club should be at least 50%. 50%. If you're not providing for 50% of your credit sales as provision for bad debt, you'll be in serious okra soup. You'll be in serious okra soup. By the time the actual bad debt hits you, you will not have provision for them. It is better that the actual bad debt is smaller than the provision than when the actual bad debt is bigger than the provision. Maybe as an accountant you may not understand it, but at the level of a CFO or at the level of maybe a group accountant, you are not managing just one company. You are managing maybe 3, 4, 5 companies, and you have to take decisions at a strategic level. You are looking at, okay, on a scale of 1 to 1 million, how much are we supposed to be expecting as profits? Okay, we are expecting like 1 million naira as profit. Okay, fine. Inside this 1 million, maybe we can just budget put in 500,000 to repair company car, so that our club PRO will have car that she'll be using to go and bring strippers for us anytime we have strippers night, and so on and so forth. So you've made that budget. You've already contacted, maybe you've contacted Tino Autos and told him, okay, see, look, we are getting you 500,000 by the end of the month. Make arrangements to refurbish our car, this, that, and that one. And Tino Autos has started working. Now, you are now looking at your report from the accountant, and you are seeing bad debt. Your profits that you were looking at is maybe 2 million, and you are seeing bad debt 1.7 million. Do you think you can be able to make that expenditure? You won't. But you've already provided, you've already planned, you've already budgeted in yourself and discussed with the company that, look, this is an expenditure we need to make. But the business, as at that point, by virtue of bad debt, may not be able to afford that expenditure. So it now boils down to finding alternative sources to augment the 300,000 so that you can be able to use it to carry the expenditure. Finally, before I wrap up this talk about expenditures, it is also advised that accountants should find a way to set up a savings structure. Set up a savings structure in whichever company you are working with. We call it savings fund. Set up a savings fund for whichever company you are working with. When we did oversight for Pluto Cove, we told them, look, choose between having a fixed account where you people deposit a certain amount of money every day after sales, or doing a flexible deposit with ICO investments. Most small businesses are turning revenue without making savings, and that is why Oga will be seeing money in his account and he will think he has money, and he will be spending it. Some CEOs are like that. As an accountant, you are supposed to have a savings fund where after every day you withdraw a certain amount of money from the company's account and send it to that account. That place will be the account housing your company payroll. You're supposed to be providing, like, from the first month to the third month, the money in your account should be able to carry the payroll for 6 months, 7 months, 8 months. That is when you are a strategic accountant. And you don't pull this money once. No, you don't. You don't pull it once. You don't pull it once. You pull it. Let's say maybe you used to have like 100,000, 200,000, 300,000 sales. There's what we call unit sales cost. Is also an advanced template that we compute for clients. They pay for it separately though. We call it unit sales cost. The unit sales cost will tell us, okay, for each bottle of Fanta that was sold, how much is the cost? So we'll look at the factors carrying that cost. The Fanta was bought, the cost price, the transportation cost, the warehousing cost, that's the loading and offloading and so on and so forth. We'll calculate all of them in a model and we'll put it. Each time you sell Fanta, the sales will reflect, the unit cost will reflect, two of them will cross match and will give you the profit per Fanta sold. The profit will show. So now at that point you start making your plans on the Fanta you are seeing there. You start making your plans from the cash you are seeing there, the money available there. That's where you start making your plans from. So you will know that if we sell a bottle of Fanta, we are making minimum of 100 naira per bottle. We're making minimum of 100 naira per bottle. So on that note, maybe we'll now start saying things like, okay, fine, since we've made 100 naira per bottle on a Fanta, we can now say, and we have at least, we make at least 10,000, we sell at least 10,000 bottles. You can now say, okay, inside these 10,000 bottles, we'll be removing 1,000 bottles. Or you can make it a fixed, flexible, that you say, okay, since we make 100 naira in each bottle of Fanta, we are going to be saving 20 naira from each bottle of Fanta that we make. So if we sell 100 bottles of Fanta, we will do 20 naira, that's the money we plan to save, times the number of bottles that we sold. It's in the model. So the amount every day when you finish computing your sales, the way computer generates everything automatically and generates your daily reports, computer will also automatically generate the amount of money you are supposed to save for that day, and it will be showing on your dashboard. So you just make arrangements for the money to be saved, and then the money is saved, and that's it. Over time, you start seeing that the company will have access to higher revenues, that they can make investments without being scared of crashing the business. That one aside, let's finish up this income, and we'll do our trial balance and we'll go home. I think we've deviated for a long time, but before then, does anybody have any question? Does anybody have any question? Okay, so we can say insert my table has headers. Okay, thank you for us, and we are good. So basically, from the income part of it, the sales revenue that comes here is automatic, so don't stress yourself. You just link it with the Excel function and we are good. So you put your sum sales B3 to it's E3 to E15, and that's it. So we have it. Now individually you pick these functions one because this is a table. Then if you want to have what it takes to copy a function, then you will do all your computations before you convert to a table, because once you convert to a table, you have to impute the functions one by one. So it's advisable you finish computing the functions before you insert the table, the Excel functions. So we've done the part of the income. Here, the only thing that comes here by automatic is sales revenue. So you just put cash, bank, discount. Discount and complementary will come automatic from sales though. As if you have automatic here in your daily report, you can just link it. You have column for discount, so when you link this one, it will be coming automatic here. So I can just say this is equals to sum. I'll go to sales, and that's it. So any discount that I put there will reflect here automatically. $2,000 is reflecting here. If I go back to sales and put 5,000, instead of 2,000, I'm going to have 7,000 here. So that is that for this. Then after this, we've done the expenses, we've done the income, we've done the daily reports. Now we can talk about the trial balance. Talk about the trial balance. Now the trial balance is your regular trial balance. The regular trial balance. Details. You can have your sales, purchases, discounts, discount allowed, sales discount, purchases discount, maybe cleaning and sanitation, maybe which other expenses do we have? Rent and rates, cash, bank. No, it's going to comprise of everything everywhere. Alright, it's going to comprise of everything everywhere. Now at the end of the day, when you finish preparing this, you start linking them one by one. Just link them, and when you are done linking them, let's link okay, wait, I think we should do then this place will be summary. Now under the summary, we're going to have a summation of everything in all the columns. Now it's from this summary that can have maybe equals to sum of all the quantities. So pick these three, pick this one, pick this one, pick this one, and that's how we'll pick it till we are done picking it, and so on and so forth. When you pick the last one, so whatever it is you record, any of those places will reflect here in this summary, and so on and so forth. Then